In this presentation, we will take a look at the profit and loss report, otherwise known as the income statement, within QuickBooks Pro 2019. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are in the home page. We currently have the open windows open. You can open the open windows by going to the view drop-down up top and selecting the open windows list. We're going to take a look now at the profit and loss. It's under reports. It's what I would call the financial statement. So this is one of the major financial statements that we would be looking at, the balance sheet and the income statement being the most common statements that we will consider. We're going to select the drop-down up top, the reports. We're going to go into company and financial, and we're going to select that first item, which is the profit and loss report. We'll say OK, or just click that item, and then we'll change the date range here. We're going to be working in 01/01/19 to 12/31/19, or January 1st, 2019 to December 31st, 2019. Here is going to be our profit and loss report. We're going to go through the sections of the profit and loss report, and then we will print out the profit and loss report and export it to Excel. It's important to note that the profit and loss report is the income statement in essence. So the financial statement of the income statement is what QuickBooks calls the profit and loss report. And that's one of the first things we want to note when we consider some of the reports within QuickBooks. Some of the things that QuickBooks will do that's the same, some of the things that they will do that will differ from normal accounting terminology. So we have to learn accounting terminology, in other words, and then we also have to learn QuickBooks terminology so that we know when we're talking to someone from financial accounting, in essence, what they want. If we have QuickBooks reports, then we have to adjust our terminology a bit as well, because even within accounting, QuickBooks will use some different terms. For example, the profit and loss will typically be called an income statement when asked for financial accounting purposes most of the time. So that's the first thing to look at. We got the profit and loss here. We're going to look at it by category. So I'm going to minimize everything. If we minimize everything here, so I just minimized the ordinary income and expenses and ordinary income and other income and expenses. We in essence have just income and expenses, and that'll give us net income. So be aware that really, if we break everything down and take out all the subcategories within the income statement or profit and loss, we're really just talking about income and expenses, and then that'll give us net income. Income minus expenses gives us net income. Now, we may have some other things in there that will be contra income accounts or something like that, but in essence, really, we have the revenue minus the expenses. Most everything other than that is going to be some breakout of it, possibly subcategories as well along the way, along the road from income to expenses, in order to give us more detail about the story. So let's unhide these as we go. So we're going to select this item, and then let's take this piece by piece. So I'm going to compress expenses and compress cost of goods sold, and we'll look first at income. The income section, if we see a normal income statement for most companies, is only going to include a couple different things, and this lines up to the income statement fairly well for reporting purposes for most companies as well, meaning we have fairly generic income terminology, merchandising sale, we've got rent music equipment here, and services. And the income statement could be a lot more. We could break out a lot more different things within the income statement. We could, for example, group the type of things we sell as different types of inventory, in our case guitars, different types of guitars, and group the types of services into more accounts. But typically when we report the income statement, we just have very few income accounts because we really only do one or two things to generate money. And in this case, we sell merchandise. We may sell a lot of merchandise and a wide variety of merchandise, but it still all basically falls under the category of merchandise. And it's useful for us to have a limited amount of accounts on the income statement because that's useful for external reporting and a quick view of what we're doing. If we want more detail than that, such as the items that we're selling, then we can get more, or the vendors who we're selling to, we can get more detail on these items with other reports that'll break out that information, that'll give us the merchandise sales by item, by inventory item. So the income items are usually fairly small. We may even only have one line item, which would be merchandise sales if we were a merchandising company. If we're not a merchandising company, we might have just services. It might be called something else if we're some other type of company like a bookkeeper, a law firm, like fees earned, something like that, but it will all be within the income section because that's what we do to generate revenue, and typically there will be far fewer accounts in the income section than in the expense section. We do far fewer types of things to generate revenue, in other words, than we do to do everything else to help us generate revenue that we pay for to help us generate revenue, expense categories, in other words. Then we have the cost of goods sold. So I'm going to select the cost of goods sold item. Just one line item. You may ask, why does it have a drop down when it only has one line item? And QuickBooks is really going to do that every time it has kind of a different subcategory. So when we were to create the items, or when we do create the items, we'll note that we have to set up an account as either an income account type or a cost of goods sold account type, which is a kind of expense, but it's a special kind of expense that's going to be related to the inventory, related to tracking inventory. And therefore QuickBooks has its own category, its own kind of drop down related to that account type. Cost of goods sold is going to be an expense that we'll only see if we're a merchandising company. If we're a service company, usually our income statement is really pretty basic. We just got the income all grouped together and then expenses grouped together, income minus expenses, that's it. For a merchandising company, one that sells inventory, we're going to have the cost of goods sold. And this cost of goods sold will be given to us automatically if we set up the QuickBooks accounts using the QuickBooks automatic setup process. If we, in other words, choose that we want to be a merchandising company, QuickBooks will generate a chart of accounts giving us this cost of goods sold. If we, on the other hand, choose to be a service company as we do the setup process, QuickBooks will most likely not give us the cost of goods sold because we will only need it if we sell inventory. So then we got the gross profit, which is just a subtotal along the way to net income. We're on the road to get to net income here. If we sell inventory, we have this subtotal of gross profit, revenue minus the cost of goods sold, because oftentimes that's a really important number. That's a really important relationship between merchandise sales and the cost of those merchandise sales for merchandising companies. So we have this subtotal, and then we're going to have the expenses here, and this will be broken out, all the kind of normal expenses. And these are everything that's set up in our item list, in our chart of accounts, I should say, in the chart of accounts. Everything that's set up as an expense will, of course, be here in this subcategory. And this would be all the normal expenses we would probably think of that we're using and consuming in order to generate revenue. These are items we'll often start to generate as we enter data into the system. As we start to pay bills, as we start to enter bills, we will then add the expenses as we go. And of course, as we choose whatever industry we are in this case, merchandising industry and service, then QuickBooks will provide a list of items, accounts, including typical expense accounts that will be included. So we've got here a lot more expenses. You'll note that the expenses are a lot longer. We hope that the revenue is more than the expenses because in dollar amount, we want to have revenue be greater than expenses. That would be common. That would be what we would hope to happen. However, in terms of just number of accounts, there's always going to be more expense accounts because what we're doing is specializing in what we do to generate revenue and paying for everything else, specializing in the small portion of things and paying for everything else. And therefore, we have a wider variety of categories of expenses than we would for revenue. So bank service charges, computer, depreciation, insurance. Note that these are in order here by the alphabetical order within category, meaning it's revenue or income, and then it's cost of goods sold and expenses. Within those categories, such as here, we then have alphabetical order within that category. And then finally, we got total expenses down here, which will add up these expenses, and then net income calculated as gross profit minus expenses. And note that you've got this is net ordinary income, gross profit minus expenses. And notice the subtotal along the way. So don't let that confuse you. Really, we have revenue or income minus expenses. It's just we just broke out this one expense, this really important one, cost of goods sold, the type of expense We broke that out and then created a subcategory. So in essence, it's still just revenue, income, minus expenses. And then we have this other expenses down here, other income and expenses. And we often break this out on types of things that are going to be types of things that are not normal operating expenses. So other not normal operating expenses. Here we have net ordinary income, meaning ordinary part of ordinary operations. And that could be really useful because what we're telling ourselves and the readers of the financial statement is that this is the net income from just typical stuff, what would normally happen, what we're in business to do. And this stuff is going to be stuff that happened during this time period, and possibly we don't expect it to happen in the future, and or it's something that's outside of our normal business operations. For example, here we have interest in the other item, interest income. If I click down on here, we've got interest income. And we could include interest income and expenses there. And the justification for that would be that although we had to get a loan out, and we have to pay interest on that loan, which is an expense, and that's part of our operations. We need that in order to generate revenue. But if we had the financing, if we had cash, then we could remove that expense. It's not part of our normal operations to pay interest expense. It just so happens that we needed the capital financing in order to do so. If we had enough capital financing, then we wouldn't need that interest expense. So this interest expense, which QuickBooks gave us and put in the normal operating expenses, we could justify that and might say, maybe that should be down here in other income and expenses by the fact that it's not part of our normal operations. It's part of our normal operations until we get the financing, the capital, to finance ourselves and not need a loan and therefore need to pay the interest expense. The same for interest income. If we're not a company that does business investing, we're not typically going to have interest income, but we might put some money into stocks and bonds or into investments that would generate investment income or interest income for a short period of time. But normally the business, for example, here we're going to sell guitars, is not in business to generate interest income. It's in business to generate revenue from selling guitars. And therefore, if I wanted to get interest income as the owner of this guitar business, typically we should give the money to ourselves as a draw outside of the business and invest that money into some place to get interest in that way, not interest within the business, because this business is here to generate revenue based on guitar sales. So note this interest income then would only be a short-term investment for this type of company typically. And then of course, if we get to the bottom line, net income is going to be the bottom line. So that's going to be the income statement here. Main difference between QuickBooks and other types of income statements that you'll see is going to be the name, where we have the profit and loss versus what we would normally think of as an income statement type report. We also want to note the terminology here for the time period. January through December 2019 may also be seen as for the year ended 2019, same range, just different terminology. And the point here is that we need to have a range. We need to have a beginning date and an ending date. This is our performance document. This tells us how we did over time, as opposed to the balance sheet, which tells us how we do at a particular point in time. So that's going to be an overview of the profit and loss. Notice what drives the profit and loss. The income accounts here, if we double click on them, I'm going to zoom into them. We have invoices and sales receipts. That's what drives income. If you go to the home page in the open windows, that's going to be this item, an invoice and sales receipts. Those are the things that trigger income on the profit and loss. If we go back to the profit and loss and we look at the expenses and go down to the expenses, let's just take an expense, for example, utilities, then that will be driven by typically a check or a bill. So if we go back to the home page, the things that's going to generate those when we start to enter data, bills when we enter bills, and checks. Those are the things that's going to QuickBooks uses to create the expenses. Back to the profit and loss. We're going to close this back out. Actually, we'll keep that open. I was going to close the transactions. I'll open the transactions and close them. So we'll close that one. and close that. So we just have the home page and the profit and loss. Back to the profit and loss. Next thing we want to note, and we noticed this when we looked at the balance sheet, is that what's the relationship between the income statement and the balance sheet? And we can see that by going to the balance sheet. They actually show this for us on the balance sheet so we can see what is going on. So let's take a look at a standard balance sheet. We're going to go to the reports dropdown. We're going to go to company and financial and scroll down to the balance sheet standard. Balance sheet standard, and make this as of 12/31/19. And if we scroll down, so it's December 31st, 2019, it should be the same range here. If we scroll down, we see net income, 1,063.08. Back to the profit and loss, net income, 1,063.08. So note that the income statement, therefore, is part of the balance sheet. It's part of the equity section. It's part of the equity section of the balance sheet. It's the story that tells us how we get to the equity section ending balance on the balance sheet. It's part of the story. It's part of that number. And if we go back to the balance sheet, notice that QuickBooks is going to break that out for us. It's not the whole equity section. It's just telling us that part of the story that's saying, hey, this is what happened last year in terms of the equity section related to earnings for last year. That's part of the story of what equity is, what is owed to the owner within the equity section. This is something you don't typically see broken out in this way on the balance sheet. If we were to look up a company balance sheet, we typically wouldn't see net income broken out on the bottom of the balance sheet, but QuickBooks allows us to do that, and that helps us to say, oh, that's how things are linked together. That's where this is coming from. Now, you may also ask, well, how is this working? Because I only entered one date here, and I entered two dates in the profit and loss. How does QuickBooks think about that? And those are things you want to test out a little bit to go through QuickBooks, because you could enter a date range here by going to Customize Reports. And if I only entered a month, then this number may change for just the month ended, for example, December 31st, which would be different than the year's net income. Although every other number would be the same, what should change? We should have more information in the equity account because net income would have rolled into equity. Now, QuickBooks also just kind of uses whatever our normal year end is. So if December 31st is our normal year end, then QuickBooks will kind of default to a year end. So notice I only entered one date here, but QuickBooks is assuming just for an entire year, this is going to be net income. This is net income year to date. This is net income for the year 2019. So you're going to have to, this is nice that QuickBooks does that, but you got to kind of think, okay, what are the defaults? How is QuickBooks doing that? If I change the dates, what's happening to net income here versus the income statement? Is this net income calculating for an entire year, whereas the income statement is calculating for some period other than a year? So those things just to be aware of. We're going to go back to the profit and loss, and we're going to print this out a couple different ways. We'll export it to Excel. We will also print it as a Qt PDF printer or a PDF file, and we'll discuss how we can organize this information as we go through this section. So first, let's go to export. So we're going to export to Excel and create a new worksheet. And then it's going to ask us if we want to put it into a new workbook, and we do. This is going to be a new workbook. So I'm going to set up a new workbook, and then it's just going to export that, and it's going to set up our new workbook like so. And we're just going to make some adjustments to it. This could be a good starting point oftentimes for many different reports here. So it's really useful to have this information. For example, this might be a starting point where we want to have budgets and projections and think forward what's going to happen into the future. This is a good basis for that. And it's also a good way to present this information as well. So then we're going to go to the View tab up top. We're going to go to Windows and remove the split panes. We're going to go to the second tab over here, which is the page layout. Make sure it all fits on a page. There's our headers. That looks good. Back to the normal view. Going to rename this, just double clicking on it and call it P and L. And then we'll just save this. Going to go to File up top, Save As, and we'll go to Browse, and then to the desktop. See where we want to put this. We're going to go to Get Great Guitars. We're going to put this under Reports. I'm going to make a new folder. So we're going to say new folder, and I'm just going to call it section 3. In practice, we would want client folders possibly, or date folders. I'm going to put it into section 3, and then I'm just going to name it section 3 reports. 3 reports. So, and again, if we were to email this or give this to clients, we'd want to name it whatever would be appropriate, possibly the month of the reports. So we'll close that up. That's one way we can have this information. Closing this back out. We can also print it to a PDF file. So I'm going to go to print up top. We could save it as a PDF file. And it's also nice to have a PDF printer. So I'm going to practice the PDF printer. This is what I actually use as a default most of the time because it works not only here, but anytime we need to print something to a PDF file, even if there's no PDF option for a saving option. Here's the cute PDF printer. It is free, although there's other printers as well that are PDF printers. But those are nice to have. We're going to say print, and it'll then print the file and allow us to save it. We'll then select the drop down and locate where we want to put it. I'm going to put it on the desktop here, and we're going to put it into the folder called Get Great Guitars. So we're looking for Get Great Guitars. I'm going to put it into the reports, and we just set up section 3. And so I'm going to call this the profit and loss. So just P and L. We probably would want the date and whatnot on here, but I'm just going to give an example of the reports as we put them together. I'll put a 1 by it. We might make another one. Just to give an example of how these reports would list out and the different ways that we can stack these together as we start to generate reports for this section. So we can think about how we can group them together if we were to send them to others. And yes, the name would be important. And the name would kind of vary depending on what our specifics are, who we're giving this information to. So that's going to be the profit and loss report. For more accounting information and accounting courses, visit our website at accountinginstruction.info.